Precious Metal Summit 2022 in Zurich, and it's my honor and pleasure now to talk to Marc Henderson, the CEO of Laramide Resources, a great uranium company of which I'm a shareholder too. Marc, good morning. How are you?
Good morning, Jochen. It's great to see you again. It's been too long.
Definitely too long, but let's put it that way. The waiting period until we see us today is, in that sense, quite positive because uranium is above $50. That's good.
Yes, very good. Since we last saw each other, the bear market in uranium is, I can pretty much say, has finally ended, and I think we're in a very good place.
Yeah, definitely. Laramide Resources, you guys did an exceptional job so far, I would say. You have an ISR project in the US, and you have also a conventional mining, I would call it, hard rock mining, then also in the future in Australia. Let's start with the US. What's the status there? What's going on?
Yeah, so in the case of both of our projects, I mean, I think it's a time with the bear market ending. I mean, there's clearly a call for more production going forward. I think all the people that are left in the space have heard that call. I think everybody's on the move now. Our project in the U.S., we're really getting moving on that. We've got one permit to go. We're actively pursuing that now. And ditto in Australia, we're basically reactivated the project. We've done a couple of drilling projects there. It's all systems go on those two primary projects. And we're kind of fortunate because we're one of the few companies that actually has multiple projects of scale.
That's right. So let's dig shortly with the US, because I have the feeling that's the one which can go faster into production probably. It's ISR mining, which we know, in situ recovery. So what is the game plan for next year over there?
Yes, the benefit of ISR is often that it's considered fairly low capex because effectively it's a well field. You're effectively mining water, so the capex is much, much lower, and it's more of a sustaining capital thing and relatively low opex. And so we bought the project. We were formerly the royalty holder. It came with what's called an NRC license. That's Nuclear Regulatory Commission in the United States. We had to go through a process where that previous licensing was passed on to us. It requires one final permit in the state of New Mexico, and we're now pursuing that permit, which we think is probably an 18-month to 2-year kind of timeline. And then the project will be, what we call shovel ready. And the beauty of an ISR, again, though, in terms of timing, is that once you're at that shovel ready stage, it's a very quick process to actually pounds, with pounds in the can, pounds coming out of the ground, because the nature of what you're doing, you're just drilling a well field and recirculating water, bringing it to surface, etc. So that's a project that could be up and running within a year from the time you break ground.
Okay, so we could say like something like 3 years from here, you could be in production. Where do you want to process then?
Yeah, much different. That's much different than your conventional, what people think of as mines, whether they're underground or open pit or whatever. So it's very much of a differentiator. Yeah, so we would be looking at something like 3 years. We have, under that NRC license, we have the right also to build a process plant in a separate location. That's part of our license that also has a resource on it. And that's a phase 2 thing. The project is licensed ultimately for 3 million pounds of production. We'll start at 1 million, custom process that. And there's probably 8 or 10 of these plants in the United States that are all set up for toll milling. The whole United States historical production of uranium, even back in the day when you think about traditional mining, was all done with custom milling because most of the ore bodies basically didn't support massive, 2 and 3 and 5,000 ton a day throughputs. And so they all ended up ultimately custom milling. And the same thing is happening in the ISR space now as that kind of evolves. But everything in the U.S. at the moment, I would say, is all shut in, still shut in because of the price. People are still have a bit of trepidation around $50. We came screaming off the bottom, 25 to 65, back to 45. Now we're at 50, and I do think, because we've been in a correction mode now in this uranium price, probably for the best part of a year, as people really get comfortable with where we are. And I think the next leg of this now is really getting started. And as we go into obviously the winter, I mean, you're in Europe, everybody knows about the energy crisis we're in. I think nuclear is really having a moment. And I think it's a pretty interesting time to really sort of pay attention to this because you have had the benefit of you're not buying into some parabolic price move off the bottom. Now you're buying into something that's been going sideways for a year.
Definitely. Where do you see your production costs anticipated for the future with the ISR? Is it around the $40 mark?
No. The ISR typically, I mean, we can't really speak too much because of all the protocols around 43101s and things like that. We're about to do a study PA that'll give you some numbers, but we've generally used numbers that were in the lower quartile of the cost curve, and those numbers for the better ISR projects are in the $20, $25 kind of a pound range.
That's okay, that's fine. Let's move to Australia. What's the game plan there for next year? As it is hard rock, it's conventional mining, that's totally different. So I could imagine that you want to bring that also in the future into production, maybe.
Oh, 100%. Much bigger scale project, well-known project. It's one of these things, technically, we really don't need to know anything more about it. You know, it's always good if you make it a little bigger, a little better. We're doing that. We reactivated the project this year. We've done 2 drill programs. We've got a big greenfield project in the neighboring state tied onto that we want to get to, that we think is interesting. That needs political buy-in from the government. We're still in kind of the wrong parties in power effectively right now, but attitudes are changing. I mean, the one thing that you're seeing changing everywhere, and if you've seen countries that actually have existing nuclear power plants, including your own country, obviously in Germany, you know, nothing's forever. But, you know, we don't want the plants on. Well, the plants are going to be on now. Now, my guess is going to be those 3 plants you kept on in Germany, they're going to stay on longer.
They decided already.
That people are thinking it won't be next April or whatever. Japan, the same thing. And Japan, you know, post-Fukushima went through a lot of angst about nuclear power. But there was a reason they built nuclear in Japan in the first place, if you're a resource-poor country. And you can store 5 years of electricity at site. It's pretty smart. Strategic plan. So Japan now is going to, in a real push, is going to get all those plants that are already built back online now. And that, interestingly enough, is probably the biggest catalyst in the market to spur the actual price move, because they actually need fuel. They don't need fuel in 2035, maybe like when the Polish plants come online, they're going to need it in a year or two. So that's an interesting thing to watch. So I do think there's a possibility that the current government may just say, you know, this policy we've had, we've got an open mind. We're changing. We do coal, we do natural gas. There's no reason they really shouldn't be doing nuclear. So I think there's a possibility there. Absent that, there's an election. There's always another election, right? So I do think we'll get the party in that we had before. There was a window of time there when we could have built that project from 2012 to 15, but we didn't have the price. You know, we had 10 years of
nightmare.
Yeah, well, yeah.
I would call it.
Didn't feel that bad in the moment, but now when you look back on it, it was a long time.
Okay, super. So lots to do for the future, that's for sure. Also for next year, what is the status with the company concerning cash? What's going on there?
Finances are pretty good. We had, as a result of buying that asset we bought in the U.S., we did a bunch of financing. All of it had warrants attached. The warrants sequentially have all been coming in, which cashed us up. There's a bit more of that to go, and by end of first quarter next year, the capital structure is squeaky clean. No warrants, no debt, no nothing. There'll be, hopefully at that point there'll be north of $10 million in it. There obviously is plenty of demand around. There's not many uranium companies, to be honest.
No, that's right.
What I call the survivor group is quite a small group. The people that have these development projects that the world is going to need. We're one of them. We were fortunate that we have a portfolio of them. So, we think we have a pretty interesting place in the market. We're in the 2 biggest, actually we're in all the ETFs, but there's 2 very big ETFs. So the interesting thing I think for your viewers and stuff about nuclear is there's kind of a double thematic that you get with nuclear. You get the thematic of nuclear itself, which is now obviously come out of a pretty tough space into a pretty interesting place, but it's tied together with this bigger energy thematic. And the energy thematic, notwithstanding people have these mandates and they don't want to buy anything that's fossil fuels and everything else. Well, the performance in those sectors has been absolutely spectacular. And I think you're going to have a lot of money that is ultimately going to want performance. And you've seen performance in energy, and I don't think that's going to stop.
Yeah, definitely. And I think also, as you said it already, we have so less companies. I think the complete market cap of the whole uranium space is something in the order of $6 or $8 billion. That's it.
No, it's less than that. So
less than that even.
When we came off the bottom in the price, the market cap of the industry went from 12 billion to 35 billion, which is less than Elon paid for Twitter. Then that was left to last November, November 21. Then we've kind of fallen in half. And we're kind of been going sideways, but it's perking up now. And I think we're starting to see flows into these ETFs now for the first time in a while. And they really are the driver, because the public will probably initially come in through the passive vehicles to get exposure. And I think that's interesting. And I think that drives the whole space. Those 2 vehicles, so I think the market cap of the whole space is probably, let's say 15 or 20. But as you said, it's one decent S&P 500 company.
Exactly. That's the point. Super. Well, Marc, looks great with Laramide, looks great for uranium. Thank you very much for the update. And we wish you well. And I think we are in the right industry.
Yeah, thanks very much, Chuck. It was great to see you, and I appreciate the opportunity to chat today. Okay, bye now.
Yeah, ladies and gentlemen, there was Marc Henderson, the CEO of Laramide Resources, and you heard it as he said, a company out of the survival group in the uranium space, that is for sure, but very interesting projects, ISR, conventional mining, Canada, in Australia, well cashed up, and by next year then also super clean balance sheet. That's how we like it, and as I said, I'm a shareholder of the company too, so check it out. Thanks for watching us, and bye bye from Precious Metal Summit Zurich.